Welcome to Trading Lounge and the Australian report for the 10th of July, and starting on the daily chart here. As you know, we've been counting this particular little correction in here in two ways, with wave 4 where it is here. So we're looking for an A wave here, an ABC here for the B wave, and down for the C wave here. So that's one count. The other count is, in a nutshell, we can put wave 4 over here, and we look at this as wave 1 and wave 2 coming here and then pushing up for wave 3. So in this particular case here, if it's bullish, it's quite easy because we can now pretty much go along anywhere above the 6,000. We'll take a closer look at that in a moment. We do see the 6,000 as the resistance now, so let's go in and have a closer look at this. So what charts do I have here for this? So this particular chart here is where we've been looking at here, with the wave 3 here, the A wave, the B wave, and the C wave to the upside here in 1 and 2 here, and 3, 4, 5 here for this, and then this slowly, reluctantly creeping, edging lower here. So one thing we could look at here is that the length of wave A here, which is about, get that about right. So yeah, from there to here, so really just taken meeting up with that low down here really for that. I don't know if we'll get that far. The other point here too is the 61.8%. So if we take these lows here to here, that will leave us, we're on the 61.8% here now. So what we could say is that we'd expect support there anyway. We'd always expect support. Will it rise from this space, or will it drop from this space is the question. So for the any further downside here, we really need to see that that 61.8% there as the resistance area here. So that's one thing that we can be looking at today, because if that becomes the resistance, then we know that we'll be pulling down further from that. So yeah, and in terms of going long, we shouldn't go back above the 6,000 at this point, because we can see that in a classic trading levels pattern, we've moved through the level, come back up and retested it, and then made a new low below this low here. So it's rejected the 6,000 at that point. So what we need to see it now is reject the 61.8%. That last low there would be a nice keystone for that. So retesting that, but over here for that. So just bear that in mind. So yeah, look, as far as the crow flies, then the A wave here in 5 waves, a bit of a complicated, time-consuming B wave here, and then we're on this track here now, looking more confident for the C wave to come down. At the same time, we've got one more little hurdle to move through, and that's to see the 61.8% as the resistance. And second to that, if we see the 6,000 as support, then we need to be going long from that point. And as support, trading above it, like this little spike here above, that's not support. So we'd normally see the market come up and make that first high above the level. That's the key there. And then there'll be some type of corrective move here, but that becomes the catalyst and the trigger to the upside, and we can always find better positions and start working and refining those situations there. So that's really where we stand with that. It's pretty simple. The banks and most of the other stocks would be following this scenario as well here. So let's just check on the SPX and see where that closed. So that closed about 0.5% down. The Nasy's always holding up. Let me just check the Nasdaq. The Nasdaq's 0.5% up and the S&P's 0.5% down. So, you know, normally we see Friday as the bullish day. So just keep that in mind, because whatever happens on the Friday will pretty much follow through on the Monday. It's a little bit like the weather changing from day to day. Sure, you get some quite strong changes, but generally you'll see, it's a slow movement in a way. So yeah. All right, let's go in and have a closer look at this here. Obviously the bullish count for this too we need to look at, which is this one here. So looking at this as wave 1 up here and coming back for wave 2 here. And in this case here, I would just take an attempt to say that there can be one more little low in here and then a move up into this space. So in this case here, we would need to see, as I mentioned before, we would need to see the market prove to us that it's strong and it can climb above the closest largest number, and then move up from there. And as mentioned, we can get better positions through there as well. We can start working it, we could even buy the pullback here. But there's no point in being trapped in being long in here in terms of risk reward. It's just not on. Going long over here, well, the reward is good because we'd be going, in that case, we'd be going up for this third wave here in that instance, so that makes it all worthwhile. But that little bit here, when we're already in a downtrend, just doesn't make a lot of sense, So long as it stays under that trend line, basically, it's bearish in a way. So yeah, so that's the upside version of the situation, and we can drill in, have a closer look at things. So just on the hourly chart here, I was looking at it. I can see we got 5 waves down to this point here, then an A and a B and a C wave here for wave 2. This is a little bit confusing in this little area through here, but I've just labeled it as 1 and 2 here, and 3 here, and 4 here, and 5 here for wave 1 and 2 here, and down for wave 3, which is a little bit short. And then we also get wave 4 overlapping this up here. I can kind of work with that, because when you work with large numbers and you're trying to count, the count can get skewed. So once you've done this enough times, you kind of like need to accommodate that kind of behavior. I can see from this move to the top here, we can see down for 1 and back for 2 and down for 3 here, probably 4 here and down for 5 here. Now this here, this wave 3 here, in the bullish count, this could be an A wave, a B wave, and a C wave here in the bullish count here. So this is why we need to be a little bit careful in this space here. So don't overdo it on this particular low here. Once that low comes in, once we got that low in here, then you can look to short again from that point. So I'll just delete that, copy that here. And of course the stop needs to go, the current stop needs to go just above here for that. Yeah, so that's it really. I mean, technically you could bring the stop down to this point here, but because we're working with large numbers, it might want to sort of be pulled up into that space. So we just need to be a bit careful about that. And we just want to stay within the trend line area here as well with all of this. So as long as it stays in there, that's okay. It'll be pretty much the same as this one here. A little bit of variation on that, not much, but there we go. It looks pretty solid. So yeah, there's our channel, and it's moving down. It doesn't really want to move down. I mean, it is moving down, but it's reluctant to move down. It's kind of moving down. The Nasdaq is been making new highs, while the S&P has been sort of edging lower in a way. So there's a real sort of pull there. But once the Nasdaq tops out, which it can do at 10,550 area, it can drop from there, or 10,600 in this current high, and then drop quite severely from that. So we just need to be a little bit mindful of just keep an eye on the Nasdaq. If you see the Nasdaq becoming weak, then everything else is going to become weak at that point. I mean, it is really the new leader of the pack, so to speak. So what it does reflects back. All right, I'll just leave it at that, and I don't think there's any more to add to that. We could just have a quick look at the banks. So which is this? This is CBA here, and with CBA here, it's not that bearish, even though it closed lower. It's closed lower on lower volume, so the sellers haven't come in here yet for this. I mean, this one came down, it came off its lows here, so yes, it is sort of bearish, but then this one here closed on its low, but on lower volume. I mean, a trend is a trend when the volume's expanding. That's the thing. So that's what we need. We're not seeing that. We're not seeing any follow through volume on this. So I mean, it hasn't taken the top out here. That's the interesting point here, you know, because when we look at A and Z, let's just check out A and Z because we've been looking at it anyway. So it also closed on lower volume as well. So even though it closed high, well, it closed up off the low. So in a way, it's kind of like a corrective pattern. So that means that it's weak in this case. And here we're looking for 1 and 2 and 3 and 4 and 5. So we're looking for one more low here for this. But it could turn up after this low. That's the thing at this point with this. This is why we just need to be a little bit careful. So from the top there, we're kind of counting down 5 waves like this here. So once it gets to here, yes, it may drop again from this point, but this also would be like an the A wave coming down here, the A, the B, and the C wave here for the B wave. So an A and a B and a C wave finishing here, and it can push up from that point. But this low makes it really important at that point, because anything below this, after this 5 waves here, anything below that, then it becomes bearish. So that will really give us a nice keystone here to change directions and come short at this stage. So this is all sort of unwinding, because in the bigger picture here, as you know, with this here, you know, banks all around the world haven't risen here for lots of reasons, for competition, commitment into the property market, all sorts of things. You know, there's a lot of high-tech companies chipping away at their retail profits now, you know. So yeah, and this can be sort of counted as an A and a B and a C wave here. So we could be facing the bear market here for this. We just don't know yet, but it's getting a little bit closer here. So as we come down here, this could be wave 1 here, ABC for wave 2, then down for 1, then back for 2 here, then the third wave down here. That's what we're kind of looking for. So we can go short anywhere below this one here. So 1, 2, 3, 4, 5 here. Once that's finished and the market rallies back up, then we can put our short positions here for that. But at the same time, on the long side, anything above this one here, we'll be able to go long from, because that will tell us that this whole pattern over here is bullish at that point. So we're coming into a point where we're going to know what the next trend is, but we just have to work through the options at this point. But we're getting close. So next week we'll be here 1 and 2 and 3 and 4 and 5 here. So we may need 1 or 2 days here, and then we might need some sort of corrective move up through here. That might be the week after even, you know. But in a couple of weeks we'll have our trade set up either short for a nice short trade coming down, or we'll be looking to be long at that point above this level here for this. I mean, after all, this is just, in this case here, this is just a reaction of reaching the $20 mark here, the trading level 2 major level. So the arrival, and this is the reaction here. So then we'd be looking for the first high above the level, and then the corrective move, and then up again from that point. And the support that comes in here is the minor level, which is 18 in this case. And then we've got group 1 above here, 21, 22, and 23 above here. So this is the range that the correction should have in a bullish market at this level here. But this is also the level that it can fail at here as well. So Yeah, look, it's getting to the point where we could be able to put a trade onto this, but we're just not there just yet. And, we don't want to be clever and buy right on the 18 for the bounce here. Yes, we could get away with it, but that just gives us a 50-50 shot at it. We want to have better odds than that at it. So I'll leave it at that for the time being. Thanks for tuning in. Much appreciated. Cheers.